Hey there. Welcome to Genswealth, where I cover all things money. Let's talk about paying your insurance with a credit card. Most of us pay hundreds or even thousands on insurance every year. But what if you could earn cash back, points, or even free flights just for paying your insurance bills? Well, it is possible. But before you whip out your plastic, there are some important things to consider. So let's dive into how you can make this work for you. Alright, here's the deal. Many insurance providers these days allow you to pay your bills with a credit card, but they may charge a fee for doing so. This is typically between 2 and 3% of the total payment. Now, this isn't anything new. You've probably seen this option before, but it's still pretty uncommon. So let's talk about how you can make it worth your while. Here's the first thing to consider. Does your credit card earn 2% or more in cashback or transferable points? If it does, then it might make sense to pay your insurance with that card. That way you could potentially earn more in rewards than you lose to processing fees. Some cards, like the Chase Freedom Unlimited, offer a flat rate of 1.5% back on all purchases. Others, like the American Express Blue Cash Preferred, offer a higher rate of 3% on certain bills. However, you'll need to confirm that insurance payments do code as bills, as we'll see later on. Not all insurers will accept credit cards, and some may code your insurance payments as other types of transactions. So make sure you check before you swipe. Secondly, are you trying to meet a minimum spend for a sign-up bonus? Many cards offer big bonuses when you spend a certain amount in the first few months of card ownership. For example, the Capital One Quicksilver one requires you to spend $500 on the card within the first 3 months. If you have a large insurance payment coming up, then paying with this card could help you reach that minimum spend quickly and snag that bonus. Just keep in mind the processing fee, which can eat into your profits if you aren't careful. Finally, does your insurer charge a processing fee? Some companies like Progressive don't charge a fee for using a credit card, making it a great candidate for this strategy. Others might, which means you need to weigh the pros and cons carefully. Here's a quick cheat sheet of the key cards I recommend for paying insurance. First up is the Citi Double Cash. This card is a cashback champ, earning 2% on everything you buy. That's 1% when you buy something, and another 1% as you pay it off. So you get 1% when you pay your insurance, and 1% when you pay it off. The beauty of this card is its simplicity. There are no hoops to jump through or bonus categories to track. You just swipe and earn. The downside is that there is no introductory offer, but the long-term value is solid. Plus, it's a great option if you're looking to build your credit. Next on the list is the Chase Freedom Unlimited. It's a solid all-around card offering 1.5% back on all purchases. That's pretty much the same as its predecessor, the Chase Freedom. However, the unlimited version has a few extra perks. You'll get 3% back on dining and takeout, and 3% back at drugstores. This can be especially helpful if you're paying for medical insurance or medications. The downside is that you woe and earn points or miles like you would with the Chase Sapphire Preferred. But for simple cash back, it's a great choice. Coming in third is the American Express Blue Cash Preferred. This card is designed for people who want to earn lots of cash back on everyday purchases. You'll get 3% back on certain bills, 6% on select U.S. supermarkets, and 3% on U.S. transit. But here's the catch. You'll only get these rewards if your insurance payment codes as a bill. So it's important to check before you pay. Additionally, ULL need to spend $6,000 per year at U.S. supermarkets to earn the full 3% back. Otherwise, your reward rate will be 1%. And finally, there's a $95 annual fee, which can be a deal breaker for some. Now let's talk about the Capital One Quicksilver. It's a great option for beginners or anyone who wants a low-fuss card. You'll get 1.5% unlimited cash back on everything you buy. No rotating categories, no annual fee, no gimmicks. It's a pretty straightforward card that lets you earn rewards without any hassle. So if you want something simple and effective, this could be the one for you. And if you have the luxury of having an insurer that codes insurance payments as travel, which is rare, then the Chase Sapphire Preferred could be worth considering. You'll earn 2 times points on travel purchases and 3 times points on dining, including takeout. And that's after you meet the $95 annual fee. So you'll need to use the card strategically to make it worthwhile. Another option to consider is the PayPal Key. This card isn't technically a credit card, but it could be a game changer if you're paying online. You'll earn 2% cash back on eligible purchases when you use PayPal through the app. And if your insurer accepts PayPal, then you can indirectly pay with your credit card and earn rewards. It's a bit of a workaround, but it could be worth it if you're looking to boost your earnings. So let's talk about the downsides of paying your insurance with a credit card. First, processing fees can really eat into your profits. If your insurer charges a 3% fee, then you need to earn at least that much back on your card. Otherwise, it's not worth it. So choose your card wisely. Secondly, carrying a balance equals interest. If you don't pay your credit card bill in full each month, the interest will quickly cancel out any rewards you earn. So only swipe if you can afford to pay it off right away. Thirdly, not all insurers accept credit cards. Some smaller companies or those with older systems might not be able to process credit card payments. So call ahead and check if you're not sure. And finally, always read the fine print. Credit card companies can change their policies at any time, so make sure you're up to date on the latest fees and terms. Let's quickly recap what we've covered today. Paying your insurance with a credit card can be a smart way to earn rewards, but it's not a one-size-fits-all solution. Consider your insurer's fees, your credit card's rewards rate, and your spending habits before you swipe. If it makes financial sense for you, go for it. But if not, don't force it. There are plenty of other ways to earn rewards. Alright, that's it for this video. Thank you guys for watching. If you found it helpful, please give it a thumbs up. Don't forget to subscribe for weekly content. Also, feel free to connect with me on social media. Thanks again, and see you in the next one.